across to the management of Maruti. They spoke post their earnings, and remember the stock was down yesterday post numbers and today as well, down about 2.5%. The street expects the margins to be under a bit of pressure going forward, and that's exactly the first question that I asked Rahul Bharti, who's the Senior Executive Officer of the company, to comment on the margins. Listen in.
See, if we remove the one-time provision of the labor code of about 125 basis points, in Q2 we had a margin of 8.4%. In Q3 we had a margin of 8.1% EBIT. That's a decline of about 30 basis points. But if we adjust the one-time labor code provision, it's actually an increase of almost about 100 basis points. At the moment, we do not see much commodity pressure. There are some early signals, and it may happen in Q1 next year. Q4 is broadly fine. There are some minor issues on commodities like precious gate metal, platinum, palladium, rhodium. And but the overriding positive factor is volumes. And if volumes go up, if the market is strong, then of course the operating leverage and the lower sales promotion, the price realization, they all are able to offset that.
Right. So that leaves us with two questions to ask you. You said there could be some pressure in the first quarter on margins. Fourth quarter, are they likely to be where it would be in, say, between the 8.5% to 9% sort of mark? If you could give us a sense.
Fourth quarter is mostly where Q3 is.
Okay.
Barring some very minor changes. But in the next in Q1 there may be some issues, mostly about steel, and we are talking to the steel industry not to increase prices.
Would you be able to quantify that impact?
Not much, because there are some early signals of steel that they want to raise prices, but we are in discussion. We don't think it is justified. So still under discussion.
All right. And what about volumes? Because after the GST cut, every brokerage on the street has gone ahead and increased their sales volume expectations. What's your own internal target for the fourth quarter and FY27?
Fourth quarter, we are constrained by supplies. We have an excellent demand ahead of us, and we are struggling to produce more so that we are able to service demand. And we are increasing our capacity also to meet this demand. We have a plant of 250,000 per annum capacity in Kharkhoda coming in April, and another plant soon after within this calendar year in Gujarat. So on the 26 lakh capacity or capability we have to deliver per annum, we'll be adding about 500,000 more this year. So within calendar year 31, with this current calendar year 26, we should be having a capacity of 31 lakhs per year.
All right. And what are you expecting the industry volumes to grow at in FY27?
So it is slightly early to assess, because the current 22-24% demand may not sustain forever. It might have an element of preponed demand and postponed demand. So we are yet to make an assessment after the post-festive, post-financial year stabilization, which will make probably in about 3 months from now. But preliminary estimate is about 7% year on year should be possible.
All right, 7% year on year, with Maruti obviously going a lot higher than that, right?
We have some good models, and our market share in SUVs is increasing, so we are optimistic.
All right. South African government, they're looking to increase the tariff on imports. What's your overall exposure to South Africa when it comes to revenue, and what kind of impact do you think this could have on your volumes?
South Africa, we had exported about 95,000 cars last year, and we'll be in discussion how we can convince the government that it's a win-win for them also.
How would the India-EU FTA impact the Indian domestic makers? Because now suddenly you'll have competition from a lot of the European players where the likely price differential would be lower, and more so in the premium variants where now every automaker is looking to enter as well.
See, competition is always welcome. It brings out the best in us. And if we are, for example, if Maruti Suzuki is exporting and exporting EVs to Europe in good numbers, then of course we welcome competition in India also. So, and fortunately, the government is also being quite balanced and quite calibrated. They have gone segment-wise. They have opened the upper segments with a roadmap. So I think it will be a win-win, and we welcome. The details are not available as yet, but whatever little has come out in the public domain, it appears positive, and it appears like a very balanced approach from the government of India.
All right, and just a final question before we let you go. The entry level in the last few months saw a big jump because of the price cuts that have normalized. So how's the demand situation there? Even your e-Vitara, how's the demand on that one? And can't let you go without asking you your expectations from the budget.
Okay. So, yes, the small cars have rebounded significantly. It's a very happy situation that the customer is leading, and we are struggling to service the customer with increased supplies. And we hope this continues. Same for the Grand Vitara. And the e-Vitara also will launch very soon in export markets wherever we have shipped. It's premature to take retail feedback because not many cars would have reached the retail level. They're still in the pipeline, but we've shipped out 13,000 cars to 28 countries, and so far the traction is good. We hope it continues. On the budget, I think the government is going on a very good pace. Stability of policies has been very good for India. The focus on domestic manufacturing and on exports, Make in India, schemes like the rare earth magnet scheme, excellent initiatives by the government. So we support the government's current initiatives to encourage the manufacturing sector.
Okay, that was Maruti, but we have a whole host of other earnings to focus on. We'll take a short break, but up next, we're going to get chatting with the management of CSB Bank on their third quarter numbers.